Shock and awe, gold, silver, copper, and zinc. This 30-cent a share company could be looking at life-changing gains. Even Resource Capital Inc., a billion-dollar private equity fund made up of expert mining analysts and investors, just quietly took an 18% stake in the company. Learn more at futuremoneytrends.com/hardassets. Greetings and thank you for joining us at futuremoneytrends.com. I'm here with a special guest who has 35 years of experience in the markets, trading them actually on the futures exchange. And he actually has a website, edgetraderplus.com, where you can also learn more about his investments and what he does, as well as his thoughts on the global economy. Michael Noonan, thank you so much for joining us, sir.
Great to be here.
Well, sir, I want to talk to you about what you kind of is your signature on the website about volume, and I know how important that is when you're looking and using trades by just following essentially the volume, what the market's actually doing, what is supporting. For 2016, we have seen extreme volatility in the major indexes. We're seeing a total turnaround for gold, and I just wanted to start off with the volume trends that you're seeing and changes for 2016. What has been impressionable and notable to you?
Well, I don't think we've seen a turnaround in gold yet. And it's not just volume alone. Volume in and of itself is, it needs price to accompany it. I measure the market by developing market activity as determined by price and volume. The volume is the kind of viewed as typically people will say it's like the gas that drives a car. If you press down the accelerator and you don't have any gas in the car, you're not going to go very far. But if you press down and there's gas, that your car will move with direction and speed. So that's how volume can sometimes be used as a determinant factor as to the reliability of a particular move in the marketplace. An example recently with gold, I mentioned that February could be a significant month for gold because of the large, there was a volume increase, but the large directional price movement on a monthly basis, and weekly as well, on the monthly basis, that was a substantial move to the upside and a very strong close. And it is the type of move that we've not seen in gold in a number of years, in fact, almost since the top. And if you drill down further to the next time frame, the weekly chart, you would see at the same time that when the volume and price moved to the upside, it took out for the first time in years the last two swing highs in the gold market. So what I'm looking for now is a correction or the next reaction to the downside, and we've really not seen any since the December lows. When the December lows occurred, I did not view them as a bottom at the time, only because it was not your typical type of bottom. It can be determined as a bottom only after the fact, and what will be the determining factor is the next correction if we see a higher low established. And then we can begin to say that the trend is changing.
Well, I mean, we are at 52-week highs. We were above 1263 for I believe that would have been a technical bull market. So when you look at gold, like even the reversals we're seeing, the small reversals today, I mean, what was it, like high 40s, and all of a sudden it snaps back right into the 1270s. Isn't this confirmation enough, or it's not there yet for you?
No, it's not confirmation. It's just adding to the strength of the move that started back in December. The confirmation, then, will be in the correction that follows.
What do you think of the discrepancy with silver? Silver not only lagging behind significantly, but the gold to silver ratio is now just ridiculously out of whack. Some people think the ratio is important. I personally, I am aware of the history, but I don't really put too much weight on it. However, relative to gold, silver's looking pretty cheap, or gold's looking pretty expensive. What do you think about the discrepancy there?
I'm not sure if it's a discrepancy. It's had a historical relationship. 15 to 1 used to be a long-standing relationship. It's now presently, it went as far as 83. It's probably trading between 81 and 82 right now. I wouldn't even call it a measure of the market, and as in terms of direction, silver is sometimes said to lead to the upside, and silver has been lagging. I'm not quite sure why. I guess the major manipulation has been going on in the gold market by the elites, and there's the silver market so small it probably as a stepsister has not been paid much attention. But I think eventually that relationship will turn, and I would call it a relationship rather than a discrepancy. And I think we'll see the turn, and silver will relatively gain relative to gold in any move to the upside, and that relationship may return back into the 30s or 40s or 50s. And some people use that as a way of participating in the market. If, for example, you own a lot of gold and not much silver, and you're getting per ounce of gold 83 ounces of silver, one could sell, let's say, for example, 10 ounces of gold and receive 830 ounces of silver. If that relationship over the next couple of years snaps back down into, let's say, the 40 area, now you're only getting 40 ounces of silver. You can repurchase, for example, your gold by switching from silver, where you had 830 ounces, and almost come close to doubling your holdings of gold without leaving the market. So there's an importance with the silver gold relationship.
You've been trading the markets for 35 years. In the past 7 years specifically, there's been so much open market manipulation, central bank intervention. And I know the plunge protection team that was established in the 80s, and there was manipulation probably going on since the whole thing started. But you've been trading for 35 years. Is the manipulation and the high frequency trading, is it almost making it impossible to do successful trading and forecasts, or is it making it even easier because the manipulation and the bias is obviously gold down, the Dow Jones up?
Well, it's a good question. Markets throughout the history of all markets have been manipulated. There's the degree to which the manipulation has been undergone for the last several years has been just perverse in some ways. I have stopped as a personal choice, and I acknowledge this in my commentaries and the articles that I wrote. I stopped trading gold and silver from the short side, just to not be a participant in the manipulators to the downside. The same thing with the stock market. I stopped recommending, probably 3 years ago, the mainstay of my commentaries, the articles, were the stock market and the S&P. And I stopped going to the long side, recommending the long side simply by virtue of not wanting to be an active participant in the manipulation that was going to the upside. I mean, personal choices. Still, I've missed some substantial moves up in the stock market, down in the metals. The manipulation doesn't make it harder that I can determine. The high frequency trading, I'm aware of it. I don't follow it. I don't follow fundamentals at all. All I do is look at price and volume information, because that gets translated by these high-frequency traders, by the fundamentalists, into the decision-making. And that's where I begin to read their hand. I don't see the markets having changed that dramatically in being able to make a determination when to be a buyer, when to be a seller. And that's a function, for me, that's a function of knowing the trend and following the trend.
When did you become, I guess, aware of, or when did you start to see that there was more to the markets than just, people trading and some banks involved? When did you start to really look into bigger players that are behind the scenes moving and controlling the markets?
It's not looking at the bigger players. It's understanding that the bigger players are more dominant. And any time that you see large spikes in volume, it's typically the bigger players, what I would call the smart money, for example, the more controlling factors. When you see substantial increases in volume, it usually comes at primary market turns. It's a switch from weak hands into more powerful and sustainable hands. And that's probably been in the last 10 years, I would say.
If someone was to subscribe or visit your site at edgetraderplus.com, what can they expect?
I write a weekly commentary. Right now, it's been more focused on the precious metals. I'll often add a lot of personal views as to what I think is going on within the global situation, and that's what they'll get. I'll also do non-related market articles on health, for example, or just unrelated things that are probably of general interest from almost everybody. That's what they can expect.
Where are we in the global markets right now? I mean, we have China in a recession, Europe in recession, U.S. probably heading there, and then you have negative interest rates, and who knows? The U.S. might be at negative interest rates this time next year. What are your thoughts on the current markets for 2016 and the economy going forward?
Well, that's a loaded question. I'm not sure how much I would agree with the way the question was posed.
Sure.
The global situation right now to me, it's like a boiling cauldron. You're familiar with the boiling frog analogy?
Yes.
Okay, that's pretty much where we are. The people have been so accustomed to what has been the insanity that has been going on in the markets, where reality is cast aside in favor of whatever the banks and the elites want the public to hear or read in the news and in the marketplace. It's all being directly motivated, and I think we're right now in a transition phase going from west to east, which a lot of people recognize. But I think in the transition from west to east, the horse riders are going to be the same. The horses will change.
It's interesting. It's
the horse riders being the elites and the money changers.
Yeah. So the transfer. I mean, the demographics for China, where you've got so many more old people than young people. Same thing for Japan. The U.S. actually has pretty good demographics compared to Asia and Europe. So, and the U.S. is also just so far ahead of everybody else. I mean, when you consider the average income for an emerging economy, you're looking at 4, 5, 6, 7, 8 grand, and in the U.S. it's upwards of 50,000. I'm a big believer when I look at the U.S. that we're in a systemic depression, and the only reason it's not a recession is because it's just propaganda. However, with that said, when I do look at the rest of the world, I do see the U.S. still fundamentally stronger going forward. Would you disagree with that statement?
Pretty much, yes. The U.S. to me is a hollowed out country of what it used to be from years ago. It's pretty much done as a country. There's no vibrancy to it. There's no. One used to always measure a country by looking at their savings rate, looking at stock and the way things are building in the economy. It's all gone in the United States. You have more and more people that are dependent upon the government. You have more and more people that are disappearing from the workforce. All the information that's coming from the government is predicated on lies, and it's the only health that the U.S. has, and I wouldn't call it health, is their exertion of their military will and might against any opposing countries.
Yeah, no, and I agree with the statement and the analysis that the U.S. is not going to improve. I do think things are going to get worse in the U.S., that it's topped off, at least unless technology can have a major game changer for us, which I think that's in the cards. But when I look at a country like China, because everybody keeps saying everything's going east, China has more poor people than the U.S. has people. Same thing for India. So yes, the U.S. has many people who are dependent on the government, but these other countries, I just don't see where is the alternative country or even region that would be the alternative to the U.S. The U.S. having good infrastructure, a good labor force, and is a leader in technology, right?
Well, the infrastructure is crumbling. The labor force is questionable. There's fewer and fewer jobs available. Most of them are in the service industry. China, compare China with the United States. What is China doing? They are building economic relationships around the world. They are building infrastructures, the Silk Road, as it were. They're building all kinds of connections with Russia, with the rest of the world. The United States, by contrast, is exporting war only. So I can't. That's my perspective, but I can't agree with how you're seeing that the United States is the go-to place or the place to be. I think it's going to be history. We're acting more like a third world country than the front runner that we used to be. The United States, to me, is done. It's been hollowed out to its core.
Yeah, it's weird because I agree with you on so many points. I think where I probably disagree with you is when I look at everybody else, I just don't see who's going to take the U.S.'s spot as the driver for jobs, the driver for the U.S. or for the world. And it is true with the war.
Where do you see that the United States is the driver for jobs when jobs are disappearing so dramatically in this country?
Well, the U.S. is still the on the cutting edge of technology. Austin and the Silicon Valley, New York. So, I look at the U.S. and I look at technology. I look at government debt and I see that there's like a massive tsunami of sovereign debt crisis coming in government. But then I look at the technology and the parabolic move it's happening to improve our lifestyles. That right there is where the U.S. It's not going to have a renaissance because obviously these aren't creating a ton of jobs, but it is changing the way the world is, and it's still all sourced from the U.S. So, but I wanted to ask you about war because the U.S. Is in power right now, and the global elites will do anything to defend at least, I would think, the status quo where everything for them works, right? Anybody who's in power, it's working for them. So do you see more war coming, perhaps a major war with Russia, China, and the U.S., just because the U.S. needs to distract the population and defend the current grip it has on the monetary system?
Well, it seems like the population doesn't require too much distraction. They're distracted just by being ignorant of what's going on in the world. I don't think China wants a war, nor does Russia. And I'm not sure that the United States could hold a candle to a war with Russia, given that the military might that they've been building up for years. There's still. Will there be a major war? Probably not, but they're fomenting a lot of, take the Middle East, of what's going on and the migration of Middle Easterners into Europe. That is a designed distraction. It's not by accident. And that's the way of keeping people poised on fear. This is how many of those migrants are ISIS trained and going to be like similar to like sleeper cells, and that you're going to see a lot more destructive singular events in Europe. And the United States is trying to foment that same terror mentality for this country. They've been saying, well, the war on terror. There has been no terror attacks. The biggest terrorist in the world, it has been the United States. It's been voted the number one most dangerous country by the rest of the world for the last 2-3 years.
Yeah, absolutely to that. So, Michael, last question for subscribers and listeners who are hearing you, and you have so much experience in the markets. People hear this stuff and they get nervous. So like, what should I do? They've got 401ks. They might have bought some gold. They might have a little debt. What is your recommendation for people to do with their own personal finances? Should they be buying more gold and silver? Should they have a focus of cash? I mean, what is your recommendation right now?
Well, the buying more silver and gold to me is probably the best option that individuals can exercise. Anything, 401ks, anything that's paper related, the stock market is probably going to reach its ultimate paper value, which is zero. The ownership of gold and silver has no third-party counter risks. The government cannot do anything to it when you buy and you hold it personally. I don't think the government is going to try confiscating gold and silver. The market's too small for that to do. So what they're doing is tightening the noose on the people who have cash. They're trying to move to the cashless society, making it all digital and having yet even more control. So to me, gold and silver offers the best antidote to what's going on. It's not going to be smooth sailing because the government and those in power will do everything they can to discourage those who have silver and gold and how to use it. They'll probably have to engage in maybe, I don't know, black market, bartering, but at least in the ownership, they will have that ability to utilize that kind of market and preserve what they have.
When you refer to stocks as paper, I mean, I don't see the connection just because is Google going away? Is Apple going away? Is Coca-Cola going away?
They can. Why are, they're not, how many companies have gone away, disappeared?
A lot, but I mean, there are also companies like New York Life who've been around since 200 years. York Water's been around since 1816, paying a dividend. So
disappeared. You've got a lot of market. You have a lot of banks that have disappeared. Nothing is forever, and anything that's paper related. Most of your stock market participants have been buying back their own shares. It's a Ponzi scheme that's been going on for a long time. You acknowledged from the onset how the powers that be are manipulating the stock market as well. And once that rug comes out from under them, and there's no support, it's a paper game. Period.
Michael Noonan of EdgeTraderPlus.com. Please, everybody, take the time, check his website out. Michael, can you subscribe to a free email list as well, or is there a paid membership?
No, everything is free. I have no advertising on my website. If one wants to get my articles every week and anything in between, all they have to do is leave their email. I don't use their email for anyone. I don't even know who subscribes. I don't sell the emails. They're all private. I try to present information, and people do with it as they will, or discard it as they will. That's all I do.
Well, hey, everyone, we're moving into unprecedented times. Michael has 35 years of experience in the futures market at EdgeTraderPlus.com. Again, thank you so much for your time, Michael. Hope to talk to you in a few months.